All right, welcome everyone. Hope you're having a fantastic day. Go ahead and make sure I got you guys on the right screen there. Let's go ahead and make sure you all can hear me. If you would please type the number 1 in the chat box, let me know that you can. I would truly appreciate it. There we go. All right, hey Jeff, how you doing? Loud and clear. All right. Very nice. Just give me a second to get this camera going here. There is it. There we go. Probably need to lift the shade up there. I'm here. Hey, everybody. All right. Welcome, one and all. I appreciate that. I got to lower this camera a little bit for a second so I can share my screen. We want to do that one there. Perfect. Thank you, Lee. I appreciate that. All right. Whew. I cannot believe it is a fairly cool day out. I had to put the AC on in the house. It was getting way too hot. Oh, excuse me. And I'm not even paying attention to it. But I walk inside and my dog, who's a little bit older now, will be 14 next month. I can hear him. It's okay. It's definitely too hot in the house for him. So we got to crank it up. At least that's the excuse we use. Camera is working on my side, Eric. I could see me. You guys able to see my camera? Give me 1 for yes, 2 for no. All right. Yeses. All right. Lots of ones coming across there. Excellent. Good. All right. As we do get started, keep in mind that everything we look at is for educational purposes. Nothing's meant to be advice or recommendations. If you like what you see, anything, a candidate is set up, make sure it fits your own personal risk profile and risk tolerance before ever taking on that trade, that setup, or that indicator. Okay, we have a lot going on this upcoming week. I'm going to go ahead and just modify this for now. Right, that's an advanced thing that we're not ready to release just yet. So Inner Circle check-in coming up on the 18th. That's tonight. Mastermind, that should have been yanked off of there, Lee. There is no mastermind this week because on this Friday, we're doing our live training in New York. So there is no mastermind this week. There is no Inner Circle next week. It is all based on this Friday's upcoming meeting. It's our Trader Super Summit. I'm really excited for that event. I cannot wait. On the 27th, we've got Cash Flow Secret Q&A. Power Hour Trading Coaches Playbook are both on regular schedule. Stop the BS, folks. I have 2 more left. One is this evening. Do not miss that class. Do not miss out on that class, folks. There's only 2 of them left. I'm going to walk you through 8 key components of what it takes to become a successful trader. Power option plays, E-mini Vegas spreads are on regular schedule. Covered Call Explorer will not be done on Thursday. It will be done over the weekend. Thursday, I'll be in the hotel as we're getting everything set up for Friday's event. Friday teaching. Saturday, we've got Inner Circle back at our office teaching. And then Sunday, I will be getting the video out for you all. All right. Let's see. Can't see the camera, but I can see you, which is what the camera sees. Wait, what do you mean you can't see me? Are you not seeing my screen? Yeah, we canceled Tuesday. We didn't cancel the check-in on Monday. At least I don't believe so, Erica. I'm going to have to find out on that. All right, so some say they can see it, some say they can't. You should be seeing my screen. So let me ask this. Give me a 1 for yes. Can you see on my screen, can you see all of the upcoming events? Okay. And I can see me on camera, so that seems like it's okay. Thank you for that. Darlo said, I can't attend in person. How do I get a link for Zoom? We're going to get that all set up. My team, we get together starting, well, tomorrow evening, we're going to have a quick chat. And then Wednesday, Thursday, we'll be together the whole time. We'll get all of that stuff set up. You'll get an email on that, Darlo, for that. Lee, if you would make sure to just send an email to Suzanne reminding her we've got to get a link out to everybody who's attending digitally, virtually. We asked that as part of the questionnaire, right? Who's coming live, who's not coming at all, who's coming digitally, and we'll get you those. Morning, Jennifer. Oh, thank you. I look good. Zoom settings on viewer size. Is that on my end, Will? Erica said, I'm looking forward to the Trader Super Summit. Yeah, I can't wait. I'm excited. My screen and my photo, that's good. All right, as long as you got some kind of camera on there, we're good to go, right? So that's why others are having the issues, Will said. All right, excellent. So here's our followers page. Make sure you're following along to make life easier for you folks. If you get very accustomed to, on the weekend, Saturday, Sunday, whenever you're doing your prep work, go over to tradinglikeaboss.com. Here's what you should be looking at every single weekend. You go there, we start the week off with Power Hour on the right-hand side. Here we are today, right? On the far left is Trading Coach's Playbook. There you go, on the far right. In the middle is if there's any other live trainings coming up that are free. This entire page is free. We have it on this page for you. Stop the BS is the one that's coming up. If we don't, and there was a replay of something, we would put the replay in there as well. All right. Couple of things on the homepage, guys. You're going to see the homepage, all of this, the menus on the top. You're going to see a bunch of little changes take place, like WBHQ TV is going to disappear. I'm not taking it away. It's just going to move, right? Podcast, blog are going to move. They're going to wind up on the trading resources and other changes like that. So you may have to shuck and jive a little bit to find things occasionally, but everything will still be there. We're not getting rid of anything. We're just kind of moving things around, simplifying it, putting all resources together and so forth. We're going to lay it out a little bit differently with a menu type or category type venue, the way we're going to set it up. So it should have some great value to it the way that we're doing. Okay. Yeah, great stuff by Brandon last Friday. Yeah, he's an amazing teacher. I mean, he just is. He's just phenomenal. Absolutely phenomenal. And people like what he's doing because I get emails from people from OTA all the time, wanting to talk with me about becoming coaches here, right? So I get at least a lot. We get a couple of them a month from people from there. So, all right, good. So let me take you back out of here. Oh, I don't remember who asked for it. I apologize. But under trading resources, I have not looked. We're going to go check it together. Oh, we started setting some of this stuff up. Calculators, nice. All right. Naked puts. Let's go look at the naked puts. And you can now put a $1,585 strike price. We eliminated the two numbers before the decimal point. So because I trade under $40, we put everything as the 40, but we took that away. We took away where you have to type in 0.50. You're still going to need the 0.50, right? I don't think you need 00 in there. But we did make the adjustments. I don't remember who would ask. Stephanie, was that you? Maybe. Yeah, it was a couple of weeks ago. They should be done on all the calculators now, right? Y'all need to be using these. This is the stuff we use in Covered Call Explorer. Every detail, every factoid that comes out of a calculator, you look at diagonal call spreads. I love the icons these guys have gotten for us. Every single, all this stuff down here, all of this, that whole bottom of the page. Let's see. Let me get a drawing tool here. It will be easier. All of this, right? On the bottom of the page there, every bit of that is what the calculations do inside of my spreadsheet when I do the work or the analysis for, diagonals, covered calls, and so forth. So you've got all the formulations already done for you. It's there. All you have to do is plug in a handful of numbers and data, and you can use these calculators to come with the exact same answers that I come up with in a Covered Call Explorer and so forth, right? Now, yes, I'm finding the candidates. I'm telling you what I'm using to trade and all of that. But if you find your own or things change, what happens if a stock pulls back or takes off and gets to another area of support? or a key level that you want to get into that trade, you want to do the analysis before hitting enter and say, well, it was a good setup on Thursday. Now it is Wednesday of next week. It's probably still good. No, you want to run the numbers, and that's why we put these calculators together for you to be able to do just that. We talked about keeping them in the members area only for the Covered Call Explorer members. We decided to open it up for everybody, right? So all of you can take advantage of the various calculators. Right. So when I was saying back on this page, make sure you go there over the weekend, just register for whatever's coming up for free. It just makes it so much easier to do it all at once. We're even looking at least for Power Hour and Trading Coaches Playbook, that when you register for one, it's going to ask you, oh, do you want to register for the other one as well? Automatically. So it's not even a second time. You're just doing it once. You're going to check a box and you'll be good to go. All right. Let me take that down. Here's our Trading Boss Manifesto, what it actually represents, what it means to be a trading boss. I'm excited about this. I have been. You guys have heard me talk about it. I read this every single day as the start of my day. This and 3 or 4 other documents that I read every day as a start. It sets me in the right place, puts my mind in the right place. This reminds me of why I do what I do for all of you, right? What it means to be the responsibility that I take on when I agree that a person has said, yes, I want to follow what you do and I want to learn from you. This is the responsibility that I take on, or the commitment that I am willing to put out there for what I'm willing to do to make sure that you get what you need out of this, become a functional trader across the board, right? And then again, stop the BS, guys. Love the photo. Actually, I think I'm wearing that same type of shirt. Yeah, it's the same type of collared shirt. I think I've got a dozen of these things. Right, we just ordered 2 more last week. Oh, this has been washed 3 times. Let's get a different one. I don't want to do that just yet. All right. So for those of you that are not familiar, Amelia's on vacation for like 10 days. It's the first one she's taken in a while. She's out and about. She's going to send us in a bunch of photos as she does. So I'm excited to see that. If you are on Trade Watch Alerts, we've extended your subscription, already done. So you don't have to worry about that based on her not being there to send text messages. We want to make sure that you got upgraded for it. Yeah, Jennifer, good for her is right. You know, I was just sorry or sad that it happened the week of Trader Super Summit. I would have loved to have had her come to New York with some of our inner circle and mastermind members, but she's living the dream, baby. That's what being retired is all about, right? Is doing just that. So what trades did you guys do today? Drop them in. Where are we today? Okay, we got a good size group here. Drop your trades in. What did you do today? Funded, not funded, it doesn't matter. You didn't do any today, but you did some on Friday. Drop them in. Drop the trades in. All right. I want to look at, look over what you guys did, talk about what you did. And then, of course, I'll share a little bit for myself and anybody else that's dropping them in. Oh, John, I love it. John said, Wheel of Fortune on Cisco, Roku, and Square, naked puts on Lyft and Boyle. Cash flow today, $1,700. Great job. Good job there. Really good job. Trader Will said AMD and Coin averaged 12%. I mean, you got to love it, Will, right? I'll take 12% every. I don't need 100% or 200% or 500%. I'll take 5% every day. Every single day, give me 5%, 5%, 5%. I'd be tickled pink with it. Right? Yeah, there you go. PK said, great job, John, with the wheel. Yep. Awesome to Will. There you go, PK. Jennifer, yeah, I love it when you guys congratulate everybody else. Way to go, John and Will. Awesome sauce. Yeah, there you go, Erica. It's always good when you see that others are out there doing the same exact thing. You know, Mondays, again, for me, are very tough. The only thing today, and you guys, if you have other trades, drop them in, right? The only thing for me today, we're going to look at SPY. Okay. So we kind of opened up flat-ish from where we were. We pulled down and we closed right at the S1 level. Who's saying that? Oh, Erica is still in the trade on Roku. Got it. Thank you, Erica. Appreciate that. Let me know if it closes out while we're here today. I'd love to know how you did. So we've got our S1 at 442.82, and our pivot point up in here at 444.5. So we'll call it 443 or 442 3/4 to 444.5. So we're looking at 1 3/4 overall. I did not take the midpoint. The S0.5 would be our midpoint. I did not take that as an exit. Okay. So we got the close right here. Whoops. We got the close right here, and we started our bounce, and I took the trade. A little bit of heat on that candle. Very nice steady climb, but we weren't taken out of this trade until 11:35. Right? Of course, everything we talk is non-funded, right? But we weren't taken out until 11:35 when we finally moved up to pivot point and got taken out of the complete trade. It was a smaller amount of contracts, just with the uncertainty going on out there. And there's, I talked last week, the week before, about some of the factors coming up and affecting the markets. Well, one of the things that I don't remember if I mentioned, I think I did, but I'm not sure. But looking today, what was oil up to? $91 a barrel. Let me just shut this computer volume off. It's everybody registering for Stop the BS. It was like $91 a barrel this morning, something like that. And there's concern of we're going to hit that $100 barrel. We are in a lot of turmoil. Cities are functionally going to fall apart with this upcoming year, I believe. At least the cities that are dealing with the migrants coming in over the border. Mayor Adams here in New York City, not my mayor, but the mayor of the city. I'm not in the city. The New York City mayor said that, we're dead. As a city, we can't sustain. Can you imagine as a country? And I don't understand why someone hasn't had the foresight to go, lock the dang door, no one comes across anymore. No, stop, no more. Hey, bring your tire, do it. No, stop. We got too much. Stop. Right? But that's another factor of what's going to happen. They're talking about massive budget cuts to be able to afford this in New York City. So it means somebody somewhere else is not going to be covered, right? For something that they're getting, a service that the city offers. My mom is senior citizen, right? She's not a fixed income at this point in her life. She doesn't have anything new coming in, right? She's okay. She's okay, but she relies on certain things, her Social Security and so forth, right? And already I'm hearing her saying, does that mean we're going to get our Social Security cut now? Or we're going to not have the increase that we should be having coming across the board, right? The price of oil hitting where it is right now, I fully expect, whether it becomes planned or not, I fully expect that we will see $4.50 gas by the time election time gets here. We'll see $4.50 gas. Whether it is the OPEC doing it on purpose to slap one of the candidates, Republican, Democrat, whomever it might be, to slap them for it, or to say we don't really care about you, or to say, hey, we think that there might be a change in the White House, and if that's the case, the U.S. is going to start producing their own oil again. So we should raise the price and get as much as we can right now, before we lose it and wind up back down at $60 a barrel again, right? Which I think, listen, $60 a barrel I think is a little low. Oil companies will struggle a little bit at that point. $70, $75 a barrel I think is doable. It's affordable. It works, right? But depending on how the U.S. does it, we could be back at 2 and change for gas, depending on how fast they can ramp back up again. Yep, Powell is speaking on Wednesday. Exactly, Karen. So that's going to be part of it as well, right? I saw what's her name there? Oh, goodness gracious, the secretary, the former Fed chair. Anyway, whatever her name is, Yellen. Thank you, because that's everything. Every time I say that's what I want to do is be yelling at her. She's talking auto workers strike. We want to resolve a fair. We want to resolve it fairly for both sides. You can call it whatever you want, folks. Listen, bottom line is companies have to raise prices for reasons, right? They've got to raise prices because they have to pay workers more money. They have to pay for inventory, raw materials, whatever it is. Costs go up, right? They go up. Who was it? Was it the auto workers that wanted 40%? And I'm not saying they don't deserve it. I don't know anything about their contract or not. So don't send me any hate speech emails and stuff, right? We're just talking out loud here is all it is, okay? But if workers' salaries go up 40% in any industry have to go up 40%, guess what? the end result is the product is going to have to go up in price. So yes, the workers are getting more money, but now going to have to pay more money for every other service that they buy because everybody wants that same 40%. I have a family member who works for New York City, and they're looking at 4 years. 4 years, I think they're looking. It's a union job. It's the city. I think it's like 30% is what I think they're trying for right now. Is what they're going after. That's at least what the members are saying they want to see. 30% for that 4-year increase. That's great. The workers get more pay, but you know what? The price of pizza is going up. The price of gas is going up. The price of food is going up. Of eating out is going up. And where's the proof? It's in the pudding. What does that mean? One of the early indicators in the market is what happens on Broadway. And Broadway sales have slumped dramatically right now from where they were. So the question is, I even just saw that on CNBC not long ago. The question there is this the start of the beginning of the end? You know, when the market starts falling apart. I mean, I'm hearing individuals that are talking about this month, October, recession. We are in recession come this month. It's going to be announced. We're going to, right or wrong, I don't know. Right? The person I'm referring to follows an analyst, big analyst that is screaming up top of his lungs that it's going to happen for October. We'll see. Right? I don't know. What I can tell you is, right or wrong, good or bad, when wages go up, the price of the product goes up, right? It has to. And although prices go up, but that means the same person that just got the increase is going to be looking to pay more, is going to be expected to pay more money when they buy something else, right? Or should I say everything else? Now, getting the increase will certainly help them afford it, but we can only do that so many times, right? You can only do that for so long before things are going to fall apart. Recession, all of that, I think wanted, probably not, needed, maybe. Okay. Right, there you go, PK. The old correlation, for every action, there is a reaction. Yeah, Jeff said currently $4.75 a gallon in Phoenix. So we are $3.59. No, that's not it. $3.69 is the cheapest I've seen it by us. We were in the Hamptons this weekend, my wife and I. We celebrated our 33rd wedding anniversary. So we spent a little bit of time in the Hamptons with the puppy, which was a lot of fun. So we were driving out there and we saw gas that had gotten up into $4.49 or $4.59. Thank you for all the congratulations, folks. Appreciate it. It was like $4.59 a gallon we saw out there. Not everywhere. We did find a $3.75 somewhere. And when I say find, we drove past it. We weren't looking for a gas station. We drove past it, right? Yeah, it was a lot of fun. We were in Hampton Bays is where we were. So it was a lot of fun, gorgeous. And we were in the downtown over there. We spent the entire day just downtown. We went to one other park, watched some stuff that was going on over there. But otherwise, we were in that downtown area. But gas prices are high, like Jeff said, where he is, $4.75 in Phoenix. Yeah, exactly, Robin. Think of those that are on a fixed income now that, you know, prices go up like this and they can't afford it. It happens all the time. All the time. I mean, I am notorious for going into the supermarket. I don't care for the supermarket that's by us. I only shop the outer aisles in this place. It is a very small brand supermarket. They cater to, I'm surprised they put it in our neighborhood. They cater to lower costs. Suspiciously low prices is the words that they use in their tagline. I don't know if I want to buy food from a place that says suspiciously low prices. Right, but I figure, what are they doing to the apples? Right, they're not growing them, right? So it's okay. But everything has got their brand name on it, and you'll find people walking in that just can't afford the groceries. You're standing at the counter and they're putting stuff back. Oh no, wait, stop! No, hold on. I still have 5 items left. I need these 2, so let's take those 4 items out, put those 2 in instead, and okay, I can afford that. You know, and more than one occasion have paid for that person's groceries, and it's not just there. I mean, I was in Home Depot last week buying wood. I had to cut sheets of plywood cut down small enough that I could fit it in my truck without a problem. A guy came over and said, hey, it was clear that he was, down on his luck. Said, hey, you know, if you could use some help, I'll be happy to help you. I said, you know what? I don't carry any cash, but I do appreciate it. He takes one step away, turns back around to me and goes, listen, he goes, I'm just looking for food. He goes, but if you don't have any cash, no problem. If you need help, he said, I'll be glad to help you, even if you have nothing to give me. I went over to Burger King, grabbed him food, got him a gift certificate, and went back and handed it to him and thanked him for willing to help me. I didn't take his help. It was a small piece of plywood. It was 3/8 of an inch thick. It's not. It might have weighed 12 pounds. It was just, 36 inches wide. And was able to get this guy some food right then and there, right, to help him. There are people, and that's going to get worse. That's going to get worse. We're going to have more and more and more of that happening, right? So, but I am very hard pressed to do things like that because I just don't always trust that it's real. Especially, they did a story recently in New York where they found a woman that is on crutches, hunched over, doesn't speak English, but got in an accident, and they followed her. The news followed her, videotaped her in very expensive clothes in a very expensive restaurant with very nice friends, and confronted her on the streets of New York. So go figure. Yeah, it's still too high. That said, sometimes I pay for the person in front or behind me. I do it in if we go through drive-throughs, I do it. My youngest daughter is notorious for it. She probably does it every other time in a drive-through. She pays for the person behind her. Every other time behind that she goes. Exactly, Erica. We're all here to help others like that. So all of that, right, I'm kind of jumping ahead to our topic for today, but all of that, as we're talking about what's going on in the markets, SPY was all I got off today. Google was one that I looked at. I liked where it was opening up. I was hoping for a pullback. It's a 5-minute chart. I was hoping for a pullback. I got to go a little bit less. There we go. I just want you to see the support line. I was hoping for a pullback, although it's not much. I think it's only 10 or 12 cents. It was too fast of a move. We opened at 69, so 19 cents. We got down to a low of 61, so 11 cents. But if we go to a 1-minute candle, just go back. I was just whoosh, right? Just shot up straight in the air, right? No opportunity for it there. We got the pullback, we got the bounce. I saw this break come back up through the moving average. I thought about it for a half a second, chose not to do it, should have. But bottom line is, I didn't take this trade on today. Booking was one that I liked a lot today. And when you look at it, nice. We opened up. So if we get rid of today's candle, ta-da, we get rid of today's candle, we've got a confluence of the 8 and the fib line, right? We closed at a rank of 1. We open up today just a little bit lower. We stretch down towards support. We bounce like, yes, except that our opening price today, so the fib line is 31.4378. Our opening price is 31.54 versus, our low is 31.45 versus 31.4378. I didn't like the way it looked on the bounce, so I passed on that. Great move. I mean, if I can get 5 or 7, 8, 10 bucks on booking, tickled pink. You got a lot of stocks that are topsy-turvy. We closed in a neutral bias or a bullish neutral bias. We gap down, we push. There's just a mess. There's a road mess here. It's just a bad obstacle course. A lot of wind on the obstacle course, things blowing down all over the place, right? So not a whole lot of trades gone off today, right? So we look at the S&P 500, and I want to take a moment here. Let's go back and look at a bigger picture, okay? Actually, yeah, I'm going to leave that trend line in there. All right. So you can see where this uptrend started, right? We pulled back here. We got a nice bounce. That's where our fib is drawn off of, All right, so I'm going to bring this in a little bit now, a little bit closer where I get to you. Okay, pull back, nice run, great pullback in there. I've identified all three of these swing lows on the way up. All right, so now we'll pull in a little bit more. I'm actually going to take this down. So it gives just a little bit more real estate to work off of. So we had this, the bottoming swing low that we bounced off of, that 35, excuse me. We ran up, 43.56. We ran up, we pulled back, 44.30. Nice. And we wind up with a wedge. We get a descending top, but an ascending bottom. And I was very excited about the pattern that's in there, that we were seeing that, right? As we're in there, of course. But if we look, the way that we analyze this, and this is going to be one of those questions, I need an answer or else the answer is no. Okay, I'm not going to do it. I want to show something, you're not going to fully understand it. But I think you'll get enough of it to get the gist of where I'm coming from with this. It's that powerful of an indicator. Are you okay if I show that with you? Give me a 1 for yes, a 2 for no. If you're not, if you say, Rob, if I'm not going to fully understand it, then no, don't share it with me at all. I'm cool. That's fine by me. Yeah, someone's like, hell no, I'm going to put a 2 in there. Rob's going to call me out and people are going to be mad at me. So, all right, lots of ones. I appreciate it. Watch. All right. When you have a wedge, the breakout has to take place at a certain point. Now, because we had a descending top and an ascending bottom, the breakout could be in either direction and it's fine. And it doesn't matter. Descending triangles can break to the upside. They just don't have as strong of a move to the upside as they do the downside. You really want to see that, the directional move. Okay. So let me put this set up to where it's exactly where it's supposed to be. And I'm going to go grab Fibonacci tool. Right? It's called Fibonacci time ratios. Actually, you know what? Let me not do that. Watch. So let me grab the Fibonacci time ratios. It's down here. Right? If you don't see it, you're going to click on this gray bar. I've already activated the tool. You're going to click on this gray bar. Right click, sorry. And you're going to go down to see general toolbar. You're going to go down to the drawing toolbar. There you go. Okay. So now, as far as I know, this is not a TradeStation tool. We don't have that in TradeStation. If it is, I've not seen it. I've not used it, at least not in 9.5. I don't know if it's a TOS tool or not. Omega Charts is a very highly sophisticated tool set, especially when used with fibs. So Jim, we've got a lot of good points. Jim's asking, should it be redrawn? We have a lot of good points off of where we are or where we were, so to try to pick that bottom up doesn't help me much here either, right? So if I come in, I can't use today, right? If I come and get this day, it doesn't help. If I grab here, the bottom of that wick, I don't catch on this one here. So for me, my thought is no, I would keep it where I've got it, Jim. Tell me if there's something else that I wasn't seeing that you did. TOS does have fib time extensions. Good to know, Robert. Excellent. Yeah, I said it the other day in Stop the BS. If I was starting all over again today with what I know and had no experience with brokers, TOS would be who I'd go with. Okay, good, Jim. Good. So we're going to grab that Fibonacci tool, right? That time ratios. We're going to go with the candle that I started the wedge from, which is right here. I'm going to go up above it a little bit. And I'm going to click on it and release my left mouse, and I'm going to drag to the right. Now, my mouse has to be the intersection of where the two lines meet, right? And we want to, of course, come down lower than we are. And we're going to snap it right there. So A, my starting point right here, where the run started, right? And B is where the cone, or the convex, those 2 points meet. Now, I would prefer this to have been a little bit longer than it is, but I digress. When you get a breakout, I want the breakout to happen between the two black lines. No ifs, no ands, no buts. there's an extremely high probability of success if it breaks out within there. And again, it depends the direction, right? On an ascending triangle, things are going up. We want to break out to the upside. You can take it to the downside as well. It just doesn't, again, have as high of a probability. With the descending, you want it to the downside. So it's all a matter of what you're looking for in the trade. Okay. So with that being said, the breakout should take place somewhere between 38% and 23%, right? 0.382 and 0.236. I can go ahead, if it's if you're using Omega charts, then this is real easy, right? You would duplicate the exact lines that I have on here. Here's the first set of lines. And then beyond the 1272, you can see the rest of it. There's 1272, and there's the rest. For what we're talking about here, you only need up to this line right here. This blue line, that's all you need. Okay, and the blue are the standard lines, right? That's the ones that are in there already. So you only need really the 382, negative 382, and negative 236. Everything else is extensions that go beyond. That's a different indicator, not one that we're ready to talk about today. Okay, so here are the two black lines I inserted. I need the breakout to take place in between there. That is my highest probability of success if I can get that to happen. It didn't happen there. What happens is, though, just generally, when you move too far into what I call the cone, right? Convex the cone into the point. When you don't break out between here and here, and you start getting beyond that and get to the point, the convex, the cone, again, you tend to peter out. You get a drift down, you may get a drift up, but you don't get a bam. You don't get that kind of move, right? There's no Emerald Lagasse move happening here. Bam! None of that, all right? It's very slow, blah, really nothing there for me. And that's what happened. We just kind of do. And when I see this, some of you may be able to relate to what I'm going to say. Some may not. But I remember back in, cartoon land, Bugs Bunny days, there was this, I don't know what it was. What the animal was, or it was a vulture maybe, I don't remember, but he was singing, "I'm bringing home a baby bumblebee. Won't my mommy be so proud of me?" Driving very slow. "I'm bringing home a baby," right? Very slow, very it's like driving behind someone that's 100 years old, and God bless them for still driving, but they're real cautious and really slow, right? As they're driving, right? And they should not be put behind a Ferrari, right? With the speed anybody should not be with the speed they're going at. That's this. It just kind of just drifts out of the way, right? And we kind of failed in there. So I'm going to take that off. Let's hit the delete key. Okay. We're out of our wedge right now. So the wedge itself probably doesn't have a lot of validity to it, but you see this other line here? I explained this over the weekend, this line as to the Y, and escape. And I did it in pop. The distance between these two lines, the support level that we had here and resistance, that distance between there, I extended 100% down the same distance, right? And we're within a few pennies. It's pretty close, right? And it is parallel. That's the most important thing. Because we got in there, we got close right here, but we never got to it. We got closer here, but we never got to it. The last push on Friday, and today, on Friday, we were here. Today, we gapped down, stretched further. We went right to that trend line, and we bounced off of there. All right. So the uptrend still holding in place. But right now, it's not a confluence any longer. Well, there is some confluence, I guess, but I've got this 44.30.46 level right here. That is a critical recent swing low. By breaking that, we also broke the uptrend. We're already in a neutral bias. So we should automatically be position number one in the chair, back here, right? No hands near keyboard, no trade to take, watching what's going on, living the dream, but I am not ready to take a trade on it, okay? So we got there, we bounced, Wonderful. But when you look at this chart, when you look at what's going on, when you analyze just today, there should be a myriad of things running through your scalp, through your brain. Okay. Ooh, we came down to the 55, which has a confluence of the trend line that's in there. We gapped down through the 0 line and we bounced above that. That's great. Nice green candle and, bullish candle. And we ran right into the 21 moving average and we've slowed down right there. You should see all of that on top of the wedge formation is just above this, which is just above the 8, right? Just above that, this bullish line that we've got in there. Are we going to push up, fail, get back below the 8 and 21 and start our next leg down? Right? That's what you should be saying to yourself when you look at the chart today. Right? That's the things you should be seeing at this point. There you go. Jim said, might be a sideways move to the FOMC meeting this Wednesday when they announce a rate increase or not. CME Group website shows 98% chance of no increase on Wednesday. There you go. I haven't checked it in the last week or two. Excuse me. So 98% chance of no increase, 2% chance of a quarter increase. Well, and if the numbers are, if some of the people that are screaming recession are right, the raising of the interest rate going into a recession is probably not the best thing to do either. So that could throw a monkey wrench, to say the least, into the Fed's plans, right? Excuse me. Yep, they're equal channels, Robert, exactly, between those trend lines. All right, so a lot happening right here on the S&P 500. We are in a very precarious place. We've got a lot of key levels around us. 100-point level, Fibit, 2 moving averages, 0 line, trend, 55 moving average, recent swing low. There's a lot. What does that make? 1, 2, 3, 4, 5, 6, 7, 8. Did I count the wedge? I don't remember now. 1, 2, 3, 4, 5, 6, 7, 8, 9. What would be 10 if we extend this one out would be, there's 9 or 10 levels that we've got to be concerned with over a few hundred points on the S&P. Jim said, I saw all that what you were describing. What is the diagonal red line below for? Where does it start and where does it end? Okay. So that diagonal line, Jim, let me unscrunch because that's part of my issue right now. Here is that. Let's do that. And let's start bringing this in. So that line, Jim, is just a duplicate of these lines here. It just shifted it forward. The red is the extension as they are here. The blue is where I drew it from. And in this case, because I duplicated it, I guess it stepped it forward from when I did it. Yeah, stressful, Jennifer said. But okay, yes, you're right. It can be. But the key here is what? The key here at this point is to look at the chart and to come up with answers, right? And the answer is, I got a lot of junk happening. Do you really want to step out and say, I'm taking a trade? Maybe you do, and that's cool. Maybe you do. Probably not going to want to take the trade with the mess that we're dealing with right now. And if we are going to take the trade, where's the safer bet? Down, without a doubt. Down. Yeah, we're already in a neutral bias. I've got one, this uptrend line to break through the recent swing low. If I get above the moving averages, I got another trend line. I got the Fibit. I got the 100-point level. There's just a lot of stuff happening there. A lot of stuff happening there. So to kind of, wash it all off, I'd rather take it bearish. Now, that won't preclude me from taking SPY pivot trades at all. It won't preclude me from taking other trades. I'm just going to take them because we're in neutral bias. I'm going to take a smaller number of contracts than I would. Let's see. So Jim said day trade only, not swing or trend trade. Yeah, so we've got a couple of trades going on right now. Tesla is one of them. AMD is another. I think there's one other that we've got open right now in Pop, right? I think Tesla, I believe Tesla went against us today. I think it was a bullish trade we've got on that one. So AMD hit a target today. So we took some swing trades as we're bouncing, right? And in this mode here, a little bit of a pullback. And then we had what? This sideways yuck correction-ish thing that's happening right now, right? That we're going to have to contend with, but then, you know, could be the next couple of weeks. But I do agree. Excuse me. I do agree that this Wednesday with the Fed is going to be a big weight, even with 98%. People are not looking at the 98% anymore or this increase. It's the future statements, forward-looking statements that we want to see. All right. So let's go back in here. And how to trade the market at hand. Who was it that said it? It was Jim. Day trade only, no swing or trend trades. I am a tremendous fan of that wise advice. When it comes down to how to trade in uncertain times, right? The best thing you could ever do for yourself is shorten the amount of time you're in the trade. So from a swing or a trend trade down to a day trade, right? Short term. I'm in, I'm out, I'm done. Micro day trading is when you do even better than that. You catch the wave. You know, you get a move on a Google, right? Boom, right? You get the pullback. We got it to a key level. We got to bounce. Nothing in there scared me. We get up to that 10 o'clock, 10:10 time frame, right? And we start running out of steam. Here we got 10:25, 10:30. We start running out of steam. Done. Out of the trade. And then why? Well, just yuckville the rest of the time, right? The initial move is going to be based on the news and what's going on with the company. The rest of the day is going to be based on what's going on with the market. So by shortening your time frame up, and meaning shortening your profit up, shortening your risk up as well, but shortening that up gives us a better opportunity to be right without the whipsaw that takes place. Because if I just pick numbers, I'm just going to make it real easy on me, okay? You get into the trade, and let's say right here, an option costs $10. Again, I'm just making it up, right? Right here, the option costs 11. It costs 12. It's 13, right? By the time you're here, it might be 12. By the time you're here, it might be 10, right? By the time you're here, it might be 9. Wait, we paid 11. It was worth 11 back here. But that's not back there anymore. Why? The momentum driving it up and the pricing going up because of the way people were buying, a buying frenzy, right? All of that happening, taking place in there. Awesome, right? But now that we don't have the frenzy anymore, here's the phrase. And if you don't have it freaking tattooed to your forehead or ingrained in your brain, or stuck on a board or a sticky around your computer here, right? You're making a mistake. What compelling reason is there for me to be in this trade? Now, you could use that for entering the trade, for exiting the trade, change the word, but to be in this trade, what's the compelling reason? And we moved. We moved already. We opened up right around 136.5. We moved to 139.5, we'll call it, just easy math. You moved $3 on Google today, right? If I go back here, go to template number 1, $2.60 is the wildest average true range. That means from high to low on average for the last 13 days per day, they move $2.62 per day, Google. Well, we just got done saying that we moved almost $3. So really, are you going to get days more? Absolutely. But with a $3 move, you can't lock some profits in. You can't sell 3/4 of the trade off keep one contract on as a runner if it does, right? Because as we start to show bearish signals, you're going to have volatility swap or flip, where the vol that was in here is going to get taken out of the call options and dumped into the puts, which means they're going to suck premium out, which is why you might have been $11 here on the way up and you're at $8 here on the way down. They're sucking it out. They pumped it in on the way up, sucked it out over here. Okay, FYI. Okay, good. Folks, was this helpful? Give me 1 for yes, a 2 for no. And any other number you want to throw in there with an explanation of what it is. I'm good. 100%. Good, Stephanie. Excellent. Cool. You're welcome. You're welcome. Good. All right. So what candidates do you guys want to look at? Drop those puppies in. We got about 10 minutes. Apple is on a tear. Karen, go figure. Last week, China said that they were not going to allow iPhones in the government buildings. And now Apple iPhones are crushing it in China sales right now. Crushing it. Let's bring up our symbol grid. Let me pull up Apple as I go ahead and change this over. All symbols, right? Let's go over to template number 2. So now if you are a gambling man, woman, person, right? If you're a gambler and you say, "Ooh, I think this could be a catalyst for Apple," then Apple is down nicely from where it was, folks. Down at that 190, down at that 195 level. It's sitting right now at 180, 179. There's a lot of opportunity if you're looking at something, if you're more of that longer term buy and hold blue chip. I like Apple as a company. And if you did buy them, you could consider renting it out. I'm not saying you should. We're talking here. If you really find this news compelling, there are ways of capitalizing on it. All right. So right now, Apple, we'll talk Apple, Karen, since you brought it up. All right. Apple is in a bearish neutral bias. We've been bearish for a week and a half now. Bearish neutral bias since that bad news. We're pressing right up against that 179.40 level, which is our fib line. It's ugly. We got a bunch of resistance up ahead before we even get to that 183 level right there. Right. Ideally, I want to see this come back down, break through the 8, break through the purple line at 176 and fail. And there's the opportunity to the downside. For the upside, it's just not there for me. Now, okay. It's not that it's not there. The 21 is close enough. We're at a rank of 1 with the 21. The 55, we don't really count as a moving average the way that you would traditionally use the 8 and 21. I use it more for trend, help me with trend. So the 55, I'm not worried that it's an obstacle in my way. I don't really count it. But you've got to know it is there. It's there, but it's not a very strong one. It's more like somebody dropped a banana peel on the ground. Yeah, it's annoying. You could hurt yourself, but okay, just avoid it. Stay away from it. Don't touch the banana peel. Don't eat the used banana peel. Oh, you mean on Apple? Sure, Paul. Absolutely. Let me back this up. There's the entire fib. It goes back from May 4th to June 30th. So, Erica, what I'm talking about is, if you're so inclined, yes, you might want to buy shares if you believe this is a catalyst for Apple. If you think Apple is undervalued right now, that they should be back up at that 195, 198 level, yes, and this might not be a bad place to buy shares, right? Here's the thing. Professionals are not buying in here. They're not buying this. They already bought. They bought the pullback in here. They bought the pullback in here. They'll buy a pullback in here or in here or in here, but they're not buying the run. They're buying the pullback. You get a pullback and you start to show strength, they're buying in there. That's a professional trader. It's not the average person who is very much driven by emotion. Very much driven by emotion. All right. Let's keep going. Karen, I hope that helps. Let's go look at Qs. All right, QQQ, we're in a neutral bias right now. Yuck, yuck, yuck. I like the downside better. It's a 364, but the upside, you got to get through the moving averages. I don't really like it until above 375.69. Just not my cup of tea right now. SPY. I like SPY to the downside. Break that 444 level, retest and fail, and that 439, call it 440. That 440 is the next target or support. So target is about 441, 1.5. Somewhere in there. But overall, it's a good setup on SPY if we can get it pushed down. Amazon. All right, last one Brendan's got in there. So I love Amazon. Right? I have my full allotment of Amazon from when I bought it right after their split. Bought a couple of different times Amazon. Okay. If you're looking to add positions, get the bounce off of that 140.53. That's the pullback, and that's the place to consider. Buying on days like this is insane. Look at the pullback. Now the bounce. Right? You may have bought here or here, right? But not on some of this bigger picture. Oh, today's a good day. Let's just buy some more. There's got to be a reason for it along the way, right? So there's Amazon. So JP said, so it's not too late to buy Amazon. You know, the expression buy low and sell high is a very flawed expression. I think buy high and sell higher is a better one. If you're waiting for Amazon to get back down to 100, it's not going to happen, at least not anytime soon, right? So if you're not in it, you got to find a way to get in it. Yeah, 100 was a great target to buy it, exactly. And I was screaming about it, and you know, I had Apple, I had Amazon, I had Tesla, and I had one person in particular who was harassing me. So how does it feel to have bought them now, Rob? Yeah, I'm buying them on the way down and buying more, right? I mean, my cardiologist, we talk all day long about Tesla, right? That's his whole portfolio, or most of his portfolio is Tesla, right? And we're talking pre-split time with Tesla. So he's owned it forever. You know, back when it was like $40, $50, you know, again, pre-split, right? So, and now you're sitting at 250, 270. Okay. So Tesla's in a nice spot. It's just not a confluence. Keith, I was buying the stock, not the leaps, because I write covered calls on them. I do diagonals on those stocks, right? I think stock buying, because of the way capital gains work, I think stock buying is important for me, my family. We do it in retirement accounts. And the reason for that is, in a retirement account, I don't have to worry about capital gains, right? How long have you owned the stock? That's a huge component of it. How long have you owned the stock, right? Well, Rob, I've owned it for 2 years. Yeah, but if you're writing covered calls on it for the last 2 years, every single day, covered calls are written, you've encumbered the stock. Legally, you can't take that as a long-term capital gains. Legally, it's short-term. Check with your accountants. They'll tell you what the ruling is. That's just my understanding of it, okay? But it's definitely the, yeah, Lord, please. Don't let Amazon go back to 100. There you go, Trader Will, or ask Dale Zamzo, right? Dale will show you how. It doesn't matter. Dale will tell you things such as, you want to buy Apple back at $50 a share? We'll show you how, right? Dale's got some serious strategies that he's locked up in there, right? If you want to talk to someone that is a guru when it comes to that, send an email to support. So I want to talk to Dale, and we will connect you with him to have that conversation. All right. And Dale and I are personal friends. We have been for a very long time. The very first company I learned from back in 1997, I met Dale Zamzo back in 1999 when he was a brand new instructor, stock market education instructor. Dale and I hit it off extremely well. We became, and still are to this day, the best of friends. So the best part of that for you is Dale. You know, I feel so confident. The pastor of our church uses Dale for his financial advising. Okay. My youngest daughter is, he doesn't know it yet, but he's going to have a conversation with her and I to help her understand her own risk profile when it comes to long-term investing and what she should and should not be doing, what some of her choices are, and so forth. He and I are going to have that conversation with her. I trust my own child with him. All right. So let's see. Couldn't you buy the leaps in a retirement account? Absolutely, you could, Keith. Yes, they just expired. This, to me, this was a Warren Buffett buy. If you're willing to hold it for a day, you got to be willing to hold it for 10 years. I'm willing to hold it. Amazon, Tesla, Google, all longer term holds. Okay. All right. Let me go back. Erica was asking for Roku. Bottle out of my face there. Roku. All right. I love me some Roku. All right. Look at these black candles. Just 1, 2, 3, 4, 5, 6, 7, 8. 8 of the last 9 trading days, we've had black candles in there. And realistically, this is not black, but it is. We still close lower than we closed the previous day. So it really should be, the way you look at hollow versus solid. So the last 10 days, 8 days have not been good. Break the 75, retest and fail. 68 to 75 is 7. We don't need a fibon in there. This is 8 and jingle, 818. So we don't need a fibon in there. So we're okay. To the upside, you can use it as a switchback. You've got room to the upside up to that 79.5 level as well. I would disregard the 55 inside of there. All right, then we've got, I hope that helps, Erica. And then Joe's asking for IMT. Who is this? Bonds. Okay, iShares of bonds. Got it. Woo! Can anybody say ugly? 52 down to 42. Wow. Yowza. All right. So I've got, it's old, but I have no other choice. Okay. Let's see. Wow. Okay. Wow. So give me the pullback to the 42 level and a fail. We're looking at 41 as support. We don't really have a whole big lot of room in here. I mean, that's what I would be looking at for Joe, but I am just, there's nothing on here that is telling me to trade this, bullish or bearish. See. All right, let's make sure I didn't miss anything. All right, Joe also asked for Lockheed LMT. Fib is good, but it's old, right? It's October of last year, so we're just about a year old at this point. Earnings coming up shortly. So defense, some aerospace. We're in a bearish neutral bias. I definitely like it to the downside versus the up. Without a doubt, Joe. I like it better to that downside. That 413 and change is support, but I would not be targeting that far down. I'd be targeting that recent swing low we made in there. Right here would be my support. My target would be about 117. 117.5. All right, I hope that helps. And I think W Day was the last one. And then we got to go because I got a meeting at 1:15. So it's tough. Break the 239.63 level, and we've got to drop to the downside, or break the 244.63 and bounce, and you've got to move to the upside. Is where I'd be going with it. All right. So a couple of things. Right. Make sure you go over to tradinglikeaboss.com. Lee, can you drop in that link one more time, please, to stop the BS? tonight at 8 p.m. Is the next one. And I think the other one might be tomorrow at noon. I don't remember, but I don't have to remember. I got it written down. So, but you'll see it when you go there. You'll be able to register for either and or both of them. It's the same training, so one will normally suffice, but you're welcome to come as many of them as you want, right? But make sure to go over here, get registered, get in Trading Coach's Playbook while you're here. Make this part of your routine every single week to just get it done. With that, make it a profitable day. Stay focused on the quest to becoming a great trader. Keep crushing it, and remember, you're just one trade away. Take care, everybody. I will see you all in our next update. Bye for now.